Hi, folks. This is AskDON. I've got Larry on the phone. Larry is from Texas. He's been in the business 11 years. He's managing just a shade under $100 million. How are you today, Larry?
I'm very good. Thank you.
Can I answer a question for you?
Yes. Don, the market's been up 4 years without a correction. What do you say when people comment that maybe the market's too high?
Okay, the market's too high. What I do is I try to just really get away from the whole issue by saying this. When I do public seminars, when I talk to people one-on-one, it doesn't matter. I ask them the biggest single mistake they made in investing, and the answer every single time, Larry, is I didn't start soon enough. So I just try to tell people there's never a convenient time to invest. There never will be. And what I really don't do is I don't allow my clients to buy at the top of the market, and they don't buy at the low of the market. We dollar cost average. And by doing that, it's never too high, it's never too low. It's as we have the money, we invest. The time to invest is when you have the money. I think, Larry, clients are looking for reasons not to buy. It's not fun to save money. It's not fun. It's more fun to spend money. So when we call trying to really sell somebody a yes, they're trying to sell us a no. A lot of times it involves a date. I can't invest now. It's tax time. I can't invest now. The holidays are coming. Call me after the holidays. Call me after school's out. And I just explain it's never convenient. I said, but I can't tell you how fast time's going to go by. It's almost temporal myopia. You won't believe it. But you got to say, you and your family are the most important people you know. If you don't start now, you're dead. Now, I explain to somebody, if they're 45 years old and want to retire at age 65, and they get paid once a month, they've only got 240 paychecks left in their life, Larry, and it's over. Somebody's goal is to send their child to college. I say, look, in 180 months, a 3-year-old's going to be in college. Now, the market too high, the market too low, rates too high, rates low, is not even relevant if we're dollar cost averaging. But I can go back and give reasons not to buy as far back as the Korean War and Eisenhower's heart attack in the 50s and the Kennedy situation in the 60s and the stock market crash of the 70s. When I started in this business, Larry, the market was just a shade over 600. Now it's at 13,000. And believe me, it's been too high ever since I've been in the business. It's always going to be too high. I think it's when our children's children are going to say, well, the market's too high. So what I try to do, bottom line, Ray, is convince them that's not the issue. It's always going to be too high, too low, or whatever. The time to invest is now that you have the money. And I just appreciate the fact they're looking for reasons not to invest. It's not fun to save. But when we're 65, the milkman doesn't care what our problems are. The bank doesn't care. We've got to get started. And I tell them investing money is like taking a shower. We're not going to plunge in. We're going to turn the water on, put our hand in, and get in slowly. And I explain what dollar cost averaging is. I think by doing that, Larry, the top of the market becomes irrelevant. Does that answer your question?
Yes, thank you, Don.
Thank you.